Thanks, Chrissy. Great intro, as always. Thanks to the organisers, the sponsors and everyone who's in attendance to hear the Medallion story. Final session, final day. We're pleased to kick it off with an opportunity that's leveraged to gold, to copper and to silver. We've been working hard to build a significant inventory of that metal down at our project at Ravensthorpe. And I'm going to talk to you today about the multiple opportunities we see to not only grow that inventory further, but also commercialise the metal that we've already got on the books. So if you buy a share in a Medallion, you become a proportional owner in a business that's got JORC-compliant resources of 1.5 million ounces of gold, 120,000 tonnes of copper and 11 million ounces of silver. That metal is contained in two distinct deposits, 10 kilometres apart. They both daylight at surface, they're both shallowly drilled, they're both open in multiple directions. Medallion has the dominant ground holding across the prospective stratigraphy for both of the deposit styles, and both of those ground holdings are significantly underexplored. The assets are in the southern goldfields. They're in a region where there's two major resource projects underway at the moment. It demonstrates that you can permit, you can build and you can operate a mine in Ravensthorpe. In terms of our flagship asset, the Ravensthorpe Gold Project, it is significantly de-risked. Granted mining leases, clear from our heritage perspective. We've advanced the permits substantially. We've completed a PFS, declared ore reserves. That project today generates a net present value after tax of over $500 million at current spot prices, and it's on sale at the moment with Medallion's market cap trading somewhere around $18 million. We give investors exposure to new discovery, resource growth and development optionality, all in an environment where the $8 gold price is trading at record levels and the equity market hasn't woken up to it yet. I'll glide over this one given the time constraints, but key messages here: very strong board, very strong senior management, cash and receivables of $3.5 million to keep advancing the project forward, and the valuation is cheap relative to our peers. We're trading at $13 an ounce. That is gold only at Ravensthorpe. It's a steal given the quality of those ounces, and relative to our peers who are trading on average of somewhere between $40 and $50 an ounce. And we'll throw in the copper at Ravensthorpe and all the metal at Trilogy for free. Flagship asset, Ravensthorpe Gold Project. What's critical here are the tenements over those Annabelle volcanics, which are mapped in yellow on this plan. Those are the rocks that have hosted all of the historic production, are host to all the known prospects and the known resources. There's been 130,000 ounces of gold, about 20,000 tonnes of copper metal produced from this area over the journey. That's roughly a 60-40 split in terms of gross metal value at today's prices. So we think copper's going to have an increasingly important role to play in the Medallion story as it moves forward. We're certainly seeing that in the drilling at depth at the Cundup Mining Centre. Now, it's at the Cundup Mining Centre down there at the southern end of the field where the Archean dips beneath the Proterozoic and continues on to the south. That's where the bulk of the resources are hosted. This is where the majority of the activity, expenditure, drilling's taken place. Of the 54 kilometres of drilling that we've done, 49 kilometres have been there at Cundup, growing that resource to where it stands at the moment. Now, Cundup's going to continue to be our focus in the short, over the medium term. Focus of the business, but just in the short term, the attention of the company and the site-based personnel has turned to the significant regional exploration opportunity. We're going to roll out four priority targets in a regional drill program in coming weeks, 2,500 metres of RC drilling, 3 geochem targets, 1 structural one. 3 of these targets have never had any bedrock drilling in them to date. So early stage, potentially high impact, a lot more news to flow in coming weeks in relation to that. Zeroing in on Cundup itself. Now, Cundup is not your typical shear-hosted WA gold deposit. A number of differences, different chemistry, different host rocks, but in particular, it's got that significant copper credit. The most direct analogy we can think of is Silver Lake's Deflector project, specifically as it relates to mineralogy and then more generally as it relates to grade. Now, a lot of similarities between these two assets at a similar stage of life. There's quite a bit of scepticism around Deflector pre-development, but it's gone on to be a fabulous success story. It just gets better with time. That's the kind of outcome, that's the kind of performance that we're seeking to replicate here at Medallion. Now, this is a strongly mineralised, medium-grade gold-copper deposit. It occurs in multiple orientations. It's got low-grade variability. It's got low geometric variability. We think that low variability leads to a lower risk resource estimate and then, by extension, a lower risk mine plan. Average depth of drilling 100 metres below surface. Deepest hole into the system, 420 metres. It's open along strike and open at depth. The ounce per vertical metre profile here, 4,000, peaks at 7,100 metres below surface where the data density is at its greatest. Now we've added ounces both along strike and at depth. If you could achieve an ounce per vertical metre profile here of 5,000 to a depth of 500 metres below surface, which is still shallow for an Archean gold lode, this area gets really interesting in terms of its scale and significance. It's a great address. It's got great potential. We think multi-million ounce potential over time with continued investment. That's the arm waving done. What have we actually got on the books? We updated the resource in February last year. It was based on 44 kilometres of new drilling. Gold now stands at 1.3 million ounces, 59,000 tonnes of copper on a combined basis. That's 1.6 million ounces on a gold equivalent basis at 2.6 grams. Well understood, 63% the indicated category, over 3/4 of it within 150 metres of surface, so potentially available for open pit mining. Every metre we drilled added 20 ounces into that resource estimate on a gold equivalent basis, and every ounce that we added cost us $15. Now that was a great business when we were valued at $30 an ounce, find them for 15 and have them valued for 30. Not so much at the current valuation, and it's one of the reasons, it's not the only one, but one of them why we pulled back on the extensional drilling and sought to de-risk that metal that we've already got on the books. We did that by running a pre-feasibility study. We finished it in October. High level produces 780,000 ounces of gold and 16,000 tonnes of copper metal over a 9-year life. That's an average run rate of 92,000 ounces per annum on a gold equivalent basis. Pre-production capital $163 million, all-in sustaining costs circa $1,600 Aussie, net the byproduct credit. This demonstrates that that ore can be commercialised using industry standard mining and processing techniques and generate attractive returns relative to the risk that we take on in a development. Additionally, that favourable cost structure, it gives us exposure to the $8 gold price, the $8 copper price. Again, the net present value after tax rises to in excess of $500 million at the current spot prices. Now, given the capital requirements of this project relative to our market cap, continuing to progress this scenario looks like a big hurdle, and we are searching every different financing option to continue to progress this scenario along to final investment decision. But while the equity market hasn't reacted and while we continue that process, we're also considering other ways that you can commercialise the metal in the ground here. Now, one of those ways is to look at the high-grade sulphide portion of the resource. If you cut the resource as a starter project, if you cut the resource above 2 grams in the fresh only, it backs out 5.6 million tonnes at 4.3 grams gold and 0.6 copper for 770,000 ounces of gold and 36,000 tonnes of copper metal. That's the highest subset, the highest value subset of the resource. It's got reduced, it's simpler mining and simpler processing. Reduced capital up front, reduced perceived metallurgical risk because we're treating a single metallurgical domain and the best understood metallurgical domain of the project. Reduced disturbance footprint, it easily fits within our existing permit. Importantly, it creates a high value ore stream. It'll truck, so we can consider what established infrastructure we can lever off within economic trucking distance. Copper becomes 20% of the revenue line on day one, and it doesn't crimp us from our growth opportunities. We can always put that oxide and transitional material through the back end of the mine plan when the capital's repaid, the banks are out of the way, and everyone's just a little bit more relaxed about that material. So a lot more work to do here to scope this out, but we can advance this to a significant advanced level of study relatively quickly at low cost, given the work that we've done in the PFS. So the opportunities coming together at Ravensthorpe, we've grown, we've de-risked the resources, we've done the work, we've got opportunities to commercialise that material. There's a high probability that resource continues to grow, so there's confidence that that mineralised system has got longevity. It'll be up and running for a long time when it does get up and going. The near mine, the regional opportunity, potentially game-changing. We're only just scratching the surface of the mineralised opportunity at Cundup and across the Greenstones more generally. So the Ravensthorpe Gold Project, it's our focus. It'll continue to be our focus over the coming months and in the short term. A key catalysts are the regional drilling that's going to go on in coming weeks, and then we've also got more information coming from the sulphide development scenario. So that's it in a nutshell. Thank you for your time, and thank you, Chrissy.
Yeah.